Ladies and gentlemen, welcome to London Business School and the London Business School Alumni Energy Club. We're really pleased to see you all here. Thank you very much for turning up tonight. We are here today to talk about digitisation in energy. And it's an interesting question. Now, why did this event come about? It came about as I was finishing up a consulting engagement, and I was working with companies, and they were just talking to me about the importance of digitisation in energy. I thought to myself, I really don't understand this. What I'd like to do is to get some advice from some experts who can explain to me what our future is going to be like with digitisation in energy and oil and gas. So I've called together 4 people that I regard as being real experts in this field. And they are Julian, Adrian, Francisco, and Arno. And they are going to talk to me about this phenomenon, the difference it's going to make to energy. And I thought I'd invite all of you along, so that you come along and listen well at the same time and learn something at the same time. But as I say, we brought together some experts today to talk to us about digitisation in energy. And I'd like to introduce the first of these to speak to us today, who is Julian, Professor of Strategy and Entrepreneurship at London Business School. Julian, thank you very much for agreeing to speak with us. The floor is yours.
Thanks. And I may be an expert in digitization, but I'm not an expert in energy. And like Robin, I'm kind of curious to hear what the other speakers have to say on this specific topic. I'm going to give you the 30,000-foot view of how the digital revolution is shaping many industries, of which obviously energy is one. And I've got a couple of examples which I've kind of Googled around and found from the energy industry, but I won't claim to be able to kind of go deep on what those examples are. So the topic is how the digital revolution is changing the energy industry. We should just acknowledge what the digital revolution means. You probably heard this. The World Economic Forum has been using this language. We are in the middle of the 4th industrial revolution. Now, whether you like that characterization or not doesn't matter. It's a term you're going to hear increasingly. If water and steam was the first, electricity was the second, obviously 120 odd years ago. Most of us lived through the 3rd industrial revolution, which was, if you like, the birth of the microprocessor and the initial computer revolution. The theory is that we're now moving into a world where technology is becoming embedded in our everyday lives and is actually changing the way that we live our lives, rather than technology being somehow this add-on that we use as and when we deem necessary. So the 4th industrial revolution, it's obviously to do with the mobile revolution, it's artificial intelligence, it's blockchain, it's the Internet of Things. All of these buzzy words that you're hearing a great deal about, these all fit under the category the 4th industrial revolution. Where is this all going to take us? Ray Kurzweil is a well-known California-based sort of visionary. Some people think he's a bit of a crackpot. He's got some crazy ideas. You be the judge of that. Perhaps history will be the judge of that. He came up with this notion of the singularity, which is the point in time in about 20 years where artificial intelligence catches up with human intelligence. And he says that information-based technologies will encompass all human knowledge and proficiency, including pattern recognition, powers, problem solving, and on and on. Do we believe this? It doesn't really matter whether we believe it. It's very hard to argue theoretically that he's wrong, because of course the exponential increases we are seeing in the power of artificial intelligence, for example, with driverless cars becoming a real thing. With that happening, you can't say that it's suddenly going to stop. The nature of exponential growth is that you can't really foresee how it's going to go. So I can't say he's wrong. I don't personally buy the idea that 20 years from now our computers are going to be doing all those things. I actually prefer, particularly living in the present day, to acknowledge that going down this route of artificial intelligence, data, analytics as the drivers of corporate success actually sometimes gets us into hot water. It actually sometimes reminds us that there are things that humans do and should do that are dramatically more effective. And I've just listed some of them. I'm not going to go through this list. If we rely too much on technology to sort of help us do things, we're going to get stuck in analysis paralysis. We're not going to be taking decisive decisions. We're going to lose the contextual understanding of what exactly it is that this data is telling us. We're going to run the risk that everything we do, because it's based on the same bodies of data and the same algorithms, is going to be undifferentiated from our competitors. And we're going to struggle with this whole phenomenon around fake news and alternative facts. So my point is very simple. We have to embrace technology, and we are embracing technology, but we've also got to be conscious of the limitations of it. And we've got to be very thoughtful about how we get the right balance between tech and high touch. And of course that's not a new point, right? If any of you have got long memories, you'll know the guy called John Nesbitt wrote a book called Megatrends in 1982, and he coined this term, high tech, high touch. So way back then he was already saying the more we embrace technology, the more we've got to not lose that human touch that enables us to use that effectively. So I have a schema which hopefully you will find useful, which is a way of saying how is digitization, how are new technologies in general being employed to help companies to work more efficiently and more effectively. And I essentially bracket things into put things into three buckets. We can think of the new products and services that we're creating. And of course that's much easier to do in the pure digital world. When we think of a music company or a newspaper company or whatever, these are products which are purely digital. Those of us who live in, shall we say, the physical world, the world of atoms rather than the world of bytes, obviously our physical products are very much the same as they ever have been, but there are often digital services around those products that make them work more effectively. And indeed, while, say, Facebook lives purely in the digital world, Amazon, as another example, lives in the physical and the digital world. And Amazon's raison d'etre is deliberately linking digital infrastructure, digital services with physical delivery. So that's market innovation, new products, new services. There's a whole category of what I like to think of as operational innovation, new ways of working, essentially just taking the stuff that we do within the boundaries of the firm and working with our partners and using digital technologies to make those work better. And then the third is very much in the vernacular nowadays. We call it business model innovation. This is, what is your business model? It's your formula for how you make money. Every company has a business model, or indeed several business models. And one of the things that digitization is doing is it's making it much easier for new business models to emerge. So, it's the Ubers, the Airbnbs, the WeWorks, the Facebooks, the Googles, and so forth. All of these are companies which have come up with better business models, driven largely by the capacity, the data processing capacity they've got to play with. So I was Googling around just a couple of days ago to say to myself, to what extent can I find good examples of each of these in the energy industry? And here's where I'm going to show the limits of my knowledge, but fortunately there are consulting companies out there who write reports on these things. So there was this thing done by the World Economic Forum in correlation with Accenture, which was looking at value-added services which go with your electricity and your gas services. And I'm not going to read this list. This was purely a consumer survey of the types of services that people would value in the future. And fairly obviously, these are digital things, right? These are things which are basically embellishments on a bog standard service, which is getting access to your electricity or whatever. And these are things which to some degree already exist. So that's the sort of thing I'm talking about in terms of products and services in the energy industry. Business model innovation in energy, this is a huge topic, and I'm hoping at least one of the speakers will speak to this, is if you think about energy markets, for example, energy exchanges. Gosh, think back to the famous case of Enron, the failure of Enron. What was that? It was a business model innovation in the energy sector. We all know what happened to Enron, but just because Enron failed doesn't mean the principle around creating more vibrant energy markets goes away. So there's a lot going on in this slide. Frankly, some of you in the room will understand the details of it better than I do, but I was just trying to give a sense of where the potential for business model innovation in energy might lie. So that's the second category. New ways of working. Interestingly, I actually have a bit more in-depth knowledge on this. Two big companies you'll know, Enel in Italy and Engie in Paris and Brussels. I am currently writing case studies on both of these companies, all about their innovations in terms of how they are working. So Enel is putting a huge amount of money and energy into digital innovation, into sustainability. And NG, I just came back from meeting with some people there just 2 weeks ago. This is in their GEM group, Global Energy Markets group within NG. And they've adopted this crazy new way of working, which is called holacracy. I'm not going to tell you what holacracy is. Suffice it to say, it's a new sort of bottom-up, sort of self-organizing approach to management, which relies on people essentially taking much more responsibility for their own activities. And this is a very traditional, large energy company experimenting with what people would probably say is a fairly radical way of working. Now, I'm not saying either of them has succeeded in reinventing themselves, but my point is that they are investing in trying to find new and better ways of working, despite the fact that they're both very large and very traditional companies. And this is just a chart to reinforce the point that new ways of working matter. Very simple intuition here. This is old data, but the point is well made. You can invest in information technology or not. Thank you. You can invest in changing your workplace practices or not. And if you're a company that can be bothered to invest in information technology because you think it's going to help you, if you want a productivity payoff from that investment, that's the vertical axis, you need to invest in changing your workplace practices as well. So self-managed teams is just one of many such examples of saying, now we've got the technology to allow us to do things differently. The worst thing we could do is just use our traditional processes and automate them. What we've got to do is try to be a little bit more creative about what those processes are about in the first place. So, very simple point, but worth emphasizing. So, that was part one. Part two, I dug out this. Where should we focus this year? Blockchain. It will change everything. Everyone's talking about it. The potential applications are endless. We don't want to be left behind. What exactly is blockchain? Also artificial intelligence. And it goes on. So this guy clearly has no idea what blockchain is. Probably doesn't know what artificial intelligence is. And I think you can immediately relate to that. So, the big buzzy words of this year, for whatever reason, artificial intelligence and machine learning. Blockchain was kind of last year's word, if you see what I mean. Perhaps it was even 2 years ago. So I want to just demystify a little bit. I'm not going to dig into blockchain and artificial intelligence in terms of the underlying technologies, but I do want to make a couple of hopefully useful points about what they are and how we should be thinking about them. The first point is very simple. The famous hype cycle. You've probably heard of this thing, you've probably seen it. The theory is, I think it's called Amara's law, which is that every new technology, we overestimate their short-term benefits and we underestimate their long-term benefits. And basically, you can put any new idea on this cycle, it gets hyped up beyond belief, expectations go sky high, and then as the challenges of actually putting it into practice become clear, expectations plummet. But then gradually it kicks in terms of the capacity of that technology to fundamentally change important parts of what we do. So this is not science, but I was trying to map some of these buzzy words onto that cycle, and clear to me that of course Bitcoin is now in the trough. Blockchain as the underlying technology on which Bitcoin is built, not quite so bad. Machine learning and artificial intelligence, arguably these are words which still have much more currency and excitement around them, but there's a possibility that even they have kind of moved beyond that first peak. So, a couple of thoughts. You've all heard of blockchain. You all understand this notion that it is a so-called distributed ledger, and that the Bitcoin is one product, if you like, that sits on this underlying blockchain, this distributed ledger that creates a series of records which can never be tampered with. We add new blocks to the chain. There's enough people verifying that that blockchain is going to be stable that it cannot be hacked. The reason that it's got so many people so excited is actually, and you can almost do a sort of ideological, almost philosophical point of view on this, is the point that we are used to living in a world of centralized systems where there is some sort of central authority that decrees what we do. And to some degree, we live in the slightly decentralized world where certain powers are delegated to certain subsets, and if this starts to look a little bit like, the European Union, and this is Brussels, and this is Westminster, or whatever, those parallels have been and will be played out. I mean, this gets to ideology very quickly. People don't like being told what to do by the central service. And more importantly, in the world of computer systems, the trouble with a central authority, a centralized server, is that it can be hacked, and we also don't always trust the people running it. So the whole notion of blockchain is around this idea that what if we could create some sort of distributed system where there was no one in control? No one could tell us what to do. The system couldn't be hacked because there's nothing specifically left to hack. And so the blockchain sort of aficionados are telling us that this is going to transform the world because, of course, think about what the internet did to the sharing of information. We all now have access to any information in the world wherever we want. The thing with information, though, is that if I give you information, 5 minutes, if I give you information, I've still got that information, and I'm not selling it. I can give it to everybody, and everyone's got value from it. That's not the case with currency, as you know, and I can only give this currency once. So, to finish the story, because I want to stay on schedule, that's what got people excited. We're not there yet, right? We are absolutely not at a place where blockchain technology is solving today's problems. One example, I talked to a guy from BP just a couple of weeks ago. They have created a trading platform built on the blockchain where they're working with a number of other companies, Shell, Equinor, and so forth. And that is a working prototype, I would say, of how the blockchain is meant to be. But the point is that this is a private blockchain, which by definition isn't actually what the blockchain people are really trying to get to, which is something which is completely distributed. So we see use cases, but they are very much prototype use cases. Artificial intelligence, I've got to do the whole of artificial intelligence in 3 minutes, but I can do that. What is it? It's a simulation of human intelligence by machines. This has been going on forever, right? Artificial intelligence has existed as a field for at least the 1950s, right? The original Turing test, Alan Turing, was around in the 50s. So this is not new. What we're seeing, of course, is a gradual escalation in the capability of machines to do stuff that we used to do. So this famous image from Hans Moravec does the job nicely. He says that gradually the water level is rising, and that certain things we used to think as uniquely human, arithmetic, chess, Jeopardy, Go, are now submerged. Other things, speech recognition, vision, driving, these are things which are about to be submerged. And then the high peaks are the things which us humans can still do uniquely better than computers. But the point is, as that water level rises, gradually more and more stuff will be taken away. Moravec's paradox is the stuff that we find easy, like recognizing a face, computers find very difficult. The stuff that we find difficult, computing thousands of numbers, computers find very easy. What about, and this is an important slide because, again, artificial intelligence, we know it's been around forever. There's lots of talk about the way it's going to change the world. But an article by Tom Davenport in Harvard Business Review last year went around and talked to companies about what are the use cases, what are you actually doing today in artificial intelligence, in commercial applications. The answer is process automation, right? Robotic process automation, just simply making a bunch of existing processes work more efficiently. Cognitive insight, using the computer to predict things, 38%, and it's only 15% were actually cases where the computer's, shall we say, engaging with us. So, if you use Alexa, to order your dog food, that's cognitive engagement. That is using voice recognition software to have a conversation, as it were, with a computer. So small numbers of applications are actually doing the higher level stuff. And in fact, so if I take that famous sort of prediction from Ray Kurzweil and others from the world of artificial narrow intelligence, we're in a world of artificial narrow intelligence, to general intelligence, in other words, the computer is sort of equal to us humans, to the so-called superintelligence world, I mean, that is pure science fiction. And frankly, this is still science fiction. What our computers are going to be helping us with to do for the next few years is essentially to help us automate things which we're already doing just a little bit more efficiently. So just to finish up, if I go back to this chart that I showed at the start, and I say, where does artificial intelligence and where does blockchain fit on here? My conclusion is, actually, artificial intelligence is being used, often in very incremental ways, to help us to create new and better products and services, and to create more efficiency within our firms. Lots of applications, but they're often quite pedestrian applications. The blockchain's a funny thing, right? Because at the moment, as I say, I don't see any real cases where it's really making a difference today. But if it ever does take off, it has the potential to dramatically change things. Because it is what Clay Christensen calls a potentially disruptive technology. Artificial intelligence for me is a sustaining technology. It helps us to do what we're already doing. Blockchain is disruptive. So this is my last slide. How do we respond? Well, we stay up to date. We go to events like this. As executives in energy companies, somebody in your company has to be doing something in this area. But it's literally one or two people in most cases, certainly for blockchain. Certain applications you want to invest in. And then this notion that we're actually going to scale up in these areas. For me, we can afford to wait. We can afford to see how these things play out. So there you go. That's my pragmatic point of view. Hopefully a useful introduction. And we will close there. Thanks. Thank you.
That was really helpful, Julian. So I find it really fascinating as a framework for the whole discussion around digital technology. So as Robin said, I'm going to bring it down a level lower. So I'm going to talk about application of these digital solutions in oil and gas. Let's flick on to, Robin, we'll flick on to the next slide. Just one more. And what I'm going to do is tell you a brief story. I'm going to tell you a little bit about why is digital important to the oil and gas sector, what's driving that. I'm going to talk to you a little bit about some examples what the type of things that oil and gas companies are experimenting with. I'm going to give you some brief case studies. And then I'm going to give you some practical lessons of where we've spoken to clients and learned things from them. So I think you need a bit of context. So just focus on the circle there. The sector's gone through a massive amount of change in the last 4 or 5 years. Since the oil price crash, 2014, you saw exploration plummet. It's beginning to come back. You're seeing this massive focus on cost reduction. I know we have colleagues here from the oil and gas industry, but if you just cast your minds back to pre-2014, we had 4 years where the oil price average price was above $100 a barrel. And frankly, the industry was profligate at that price point. They're far more efficient now. And they have to retain this focus on cost reduction going forward, partly because of the oil price, which I'll talk about in a second. That focus on cost is leading to their focus on digital solutions. I think you've got the energy transition in the background, rapid disruption, growth of a low-carbon economy, etc. And then you've got other disruptors like what's happening with the US, massive shale production. All of this means that you're in a world where you have massive oversupply. You're likely to have oil prices staying fairly flat. You might have price spikes if there's a supply crunch, for example. But it's not going to be a rapid, sustainable rise in prices that's going to pull the industry out. And therefore, they need to be much more efficient. And so you've got the likes of BP CEO, are we now off to the races with spending? My sense of the industry is it's learned a painful lesson. Capital discipline is really important. Equinor, and I know Julio's here, you'll be happy with this quote, you can't have one culture when prices are low and another when prices are high. You need a culture that takes us through the cycles. And the last quote, I'll let you read it, from the gentleman from Enel. He's just talking about the fact that now decisions and change and disruptions happening so quickly, you can't plan 5-10 years ahead. You've got like 2-3 year window cycle to adapt your business to deal with that change. So lots of change going on in the sector. If we flick to the next slide. Thank you. This looks at productivity in the oil and gas sector. So it's dollars per barrel. This is capital expenditure. This is operating expenditure. So you can see that when the price was quite high, getting up to 2014, the industry was focused on production growth. It was all about get massive production growth, produce more mega projects. I'm exaggerating to make the point, but the costs went up on the capex side. Then you had the oil price crash. A lot of those projects didn't happen, so the capex comes down and the operating expenditure improves. And what the industry is beginning to realize now is if you've got to build a sustainable model going forward, you need to optimize your costs. You need to be as efficient as possible. And this is why digital is offering that panacea going forward. If we flick to the next slide. So when we talk about the benefits, the size of the prize, to use consulting terms, we often talk about, the value, the dollar prize. Just one thing. It's health and safety as well. This is a key part about it. If you think of the impact of automation, for example, you're taking people who operate in frontier regions out of danger zones and reducing their exposure to dangerous situations. So that's clearly a very important part of what digital can provide. And then structural cost reduction. So you've got some quotes here. So Wood Mackenzie, if there's any Wood Mac people here, they came out with a figure of 73 billion potential annual savings in the upstream business. IEA talks about production costs coming down 10 to 20%. Given that the capex spend of this industry is in the hundreds of billions, a couple of percentage point improvement in your production has a huge amount of savings there. So that's the size of the prize. That's what a lot of the focus is on. If we go to the next slide. Thank you, Robin. I'm just going to very briefly. You've got oil and gas companies that effectively there's a stage of evolution. It's a little bit like it's a much more simplistic version of Julian's chart. Companies that really don't have any digital expertise, just starting on the journey, slightly more vertically integrated, horizontally integrated, so you have digital right across the organization. GE is a good example. They have a digital function that sits across the whole organization. And then you have the tech companies as digital champions. You won't be able to read this slide on the right from the distance, but the point is, in a future high-tech oil and gas industry, you'll have automation, you'll have predictive analytics, big data, drones, etc., all seamlessly working together. That's the vision. Long way to go before we get there. If you go on to the next slide. So I've used the word digital a lot, but when we talk about digital, we're actually referring to a number of technologies, and they can range from drones, artificial intelligence, automation, 3D printing, smart sensors. There's a whole portfolio of capabilities there. And a lot of the oil and gas companies are experimenting with these different technologies, almost like proofs of concept. And if we flick on to the next slide, you certainly won't be able to read this, but I think we're going to share the deck afterwards so you can look at it in more detail. But they're playing around, wrong word, but they're experimenting with different technologies. So automation there, some nice examples of Aker BP and Equinor pushing automation in terms of remotely operating platforms, unmanned platforms or partially manned platforms. You can think of the cost benefits there if you can get to a fully automated platform. Use of robots here, Shell, SensorBot that's already deployed in Kashagan, doing health and safety inspections. Total's talking about deploying robots in the North Sea in 2020. Francisco, I have to apologize, there's no Repsol examples, but I would reference some of the AI work that you guys are doing. And notice even more recently, Exxon's come out with an alliance with Microsoft to look at AI to be used in the Permian. And just one point there, a lot of these oil and gas companies are forming partnerships with technology companies to build this capability, and that's a key ingredient for future success. So, lots of examples of types of plays out there, and if we flick on to the next slide. So just a few case studies, and I'm going to go through these fairly quickly. So Baker Hughes GE, this is augmented reality headsets. Quite simply, you've got an engineer on site, there's a turbine that's got a problem. He or she is looking at that turbine with their own manufactured headset, and they're connected to a remote center with a bunch of engineers who are advising that person about how to fix the problem. And you can think of the advantages there. You're saving on the downtime for shutting down the plant. You're saving on the travel costs. Quite significant advantages there. This is not rocket science. This is a kind of a practical application. Maybe if we go on to the next slide. So BP is a nice example because they're doing so many different things. And towards the end of the presentation, there's some quotes there. One thing I really want to make clear, there is no one, my humble opinion, there is no one oil and gas company that is leading the pack. There are a few companies out there that are certainly pioneering, but everybody is learning different things. But what I like about BP is lots of different examples here. Applications of robotics, so they use a drone to go into a refinery unit that can check for the integrity of the internal vessel much more quickly, much more cheaply, without risking the welfare of the worker. They've made an investment in AI, Belmont Technology looking at AI for subsurface assets. They've put sensors on their Gulf of Mexico platforms, linking them all up, working with Baker Hughes GE to look at predictive analytics. Some of the softer stuff, the whole idea of a data lake, one scalable platform where you put all the data, so technically every engineer anywhere around the world can access that data, so you can think of the productivity gains there. I like these examples of a boot camp in terms of cultural transformation. Let me just take a pause there, and I'll touch on this later. A lot of these things about digital applications is about business transformation. You're changing the way a company operates. It's a lot of cultural transformation as part of that. So they have these boot training camps to encourage people to take up new digital solutions. They send their employees to work at other tech firms. Lots of nice examples there, but we're going to move on. You can have a look at that in your leisure. Next slide. Yeah, Vopak. I thought this was just interesting. There's a Vopak Dutch terminal operator using drones in different ways. So they're using drones that go underwater, aquaplanes. They go and check the integrity of the jetty, take imagery underwater. They use drones for tank inspections. And you should just Google it. One of the joys of YouTube, you can actually see it straight away. It's like the drone is in a casing. They literally drop it inside the vessel. It hovers, takes great photos. Fast, efficient. You don't have to shut down the terminal while you undertake the inspection. So lots of upside. And these are all practical examples here. They're spending something like 100 million between 2017 and 2019 on these type of innovations. So a few examples there. If you go on to the next slide. So Cognite's an interesting one. Does anyone know Cognite? You raise your hand? Yeah, a few. Good, more than I thought. Excellent. So Cognite, I described them as a digital oil services company. So Aker, who is one of the shareholders, when they were looking as to who own, obviously, partly own Aker BP, when they were looking to build up their digital capabilities, they wanted to go out and recruit talent to bring into the organization. And they found it quite difficult. So they decided to create their own company. So they created Cognite. It's headed up by a former vice president of Microsoft. Effectively, it's a software analytics company that specifically services the oil and gas sector. They started off working for Aker BP. They now work for some of their competitors. So they work for Lundin and more recently DEA, of Wintershall Dea. And basically what they do is they identify the data in an organization, cleanse it, link it up, put it on a platform, and then if you ever get a chance, again, have a look on YouTube, you can actually see real-time data on production, pumps, etc. So it's all about making your data much more transparent. They've got a wonderful imagery of the kind of Marxist symbol of the fist and the hand up like this and liberate your data. So you get the sense of the kind of people there. So very innovative. If you go on to the next slide, I'm coming to the end. So one of the interesting things, I think, is the success of digital is predicated on the ability to share data. And clearly, we'll touch on it on one of the final slides. One of the next steps as you build up your digital organization is to build up a digital ecosystem where you share your data with other third parties. And you can clearly see benefits of that if you have a compressor on a platform and you want to improve the integrity and the performance of that. If you share the data of that performance with the company that manufactured it, you can probably find a solution there. But there's a spectrum in terms of how much data or what kind of data you're willing to share. So, if it's on the left-hand side, if it's data around compressors or pumps, you might be willing to share it. If it's interpreted subsurface data, you're certainly not going to share it. So there's clearly a sensitivity about the realities of data sharing within the digital model about how much you're willing to share. I think there's also challenges within the oil and gas industry. Can be quite a fragmented industry. So if you think about on an oil and gas platform, you have the operator that will be capturing their data. There'll be the driller, there might be a different company capturing their data. The OEM on the platform, the oil service, each of them capturing data in a different way. So even within that asset, you have a challenge about cleansing, capturing and cleansing and making that data consistent. Clearly, the big worry, one of the big worries about the whole digital thing is the more devices you have that digitally enable your organization, the more points of entry you have for cyber hacking. And you can, 3 minutes. So Maersk is a good example. 200-300 million lost in business. What I just wanted to bring your attention was the remedial action that they had to take to fix that cyber hacking. They had to reinstall 4,000 servers, 45,000 PCs, 2,500 applications over the course of 10 days in the summer of 2017. So a huge amount of investment there. If we flick to the next slide, so one of the key things we did is we interviewed a whole bunch of companies, operators, oil service companies, about what they were doing in digital. I'm not going to go through all of these, just a few points here. You're trying to fix a business problem. So don't get suckered into thinking this is a whizzy technology, we should get it. What's the business problem you've got? Does the technology help you solve that? Very basic. Seek external input, look at other sectors. Mining's a good sector in terms of what they've done with automation of trains, driverless trucks, best practice there. There is a big theme here around talent management. I was just talking about this with Francisco. This need to bring in software developers, data scientists. They have a different expectation about life. They might not necessarily choose an oil and gas company as their first choice of employment. So how do you attract this talent? How do you retain it? And Baker Hughes GE had to revamp their whole incentive structure in terms of HR to build up this capability. I'm going to flick onto the last slide. Some general principles. When we interviewed everybody, we came up with some very broad principles. The first one I've just talked about is about being business-led. Use the technology to fix the problem that you have. If you're digitizing your organization, you have to digitize effectively the whole operation. Yeah? So it's your operating model, it's your strategy, your culture, your processes. It inevitably becomes a business transformation. It's quite a massive endeavor. The ecosystem comment that I mentioned, in terms of as you digitally enable your organization, you need to think about how you build up that ecosystem. And again, Norway, the Norwegian North Sea is a good example there, where certainly Equinor is leading the way there in terms of building these digital relationships with their suppliers. Point 4, no company is the best at this. When we advise our clients, we point out different companies that have done certain things particularly well. But one of the NOCs that we interviewed made this great statement, which is IOCs, NOCs, when it comes to traditional technology, IOCs are miles ahead. When it comes to digital, we're all off on the same starting block. So there are examples out there to certainly emulate, but no winning one. And then the big one here is this capability in terms of how do you attract this software, data scientists, how do you bring them into the organization, how do you retain them? How do you deal with the rest of the organization? If you think of your legacy business, you don't want to alienate those people. How do you get them on this journey as well? So a whirlwind, but hopefully brings it down a level, and it'll be interesting how our colleagues bring it another level down.
Thank you very much. Adrian, thank you very much.
Thank you.
Thank you for everybody for being here. Thank you, Robin, for inviting me to this event. I have to say that what I'm going to show today is very technical. Maybe we are going from 30,000 feet lower, lower, and lower. So how many of you are familiar with the exploration business? Okay, this is good. Second thing is that, as Robin is pointing out, I'm going to talk about what we are doing, not what somebody else is doing or what we are going to do in the future. It's things that we have already done, and then maybe sometimes a little bit technical, but these are the things. So this is okay. So digital transformation of geosciences, the definition of the way we work in exploration. Okay, this kind of title is I'm challenging your mind, because basically what I want to tell you is that in the oil business we have been working 30 years doing the same thing, 30 years, and now it's a time to change. And then the transformation is bringing us this time. So do you imagine an industry doing the health industry 30 years the same thing? No, of course. So, hey, what happened here? Look here. What happened? This is Vatican City, the election of Pope Benedict XVI. Vatican City, the election of Pope Francis. What happened? So something has happened that is changing the way we work or the way we behave, because look at the right. Is Madam Secretary of State Hillary Clinton? What is going on that everybody is facing backwards, of course, making selfies? Something has changed. Something has happened. Once somebody told me, it was a lady saying, I have this recurring nightmare when it was my birthday, so I was thinking that somebody else is in the closet, and during the night they are going to take this body and I will be in my place the following day. And I said, you know what? This thing is happening. It's happening because one day, all of us, we went to sleep, and then in the morning, we woke up in a different world. They changed the world for us. We woke up in a different world. And this world is completely different. And this thing is the digital transformation, and this thing has happened. It's not something for the youngsters. It has already happened. And if we are not embraced or embarked, we are late, okay? So in this world where we woke up one day, so something has changed. So we can see that there are multi-billion businesses emerging everywhere that change the way we communicate, the way we do banking, the way we do shopping, the way we do everything. And all of these new things, these companies, they are changing our lives. They are making billions, okay? Not hundreds of millions. They are making billions. This is something that is happening in this new world that never happened, because if you look at what the World Economic Forum is saying, they are telling us, look, the average 500 company, Fortune 500 company, it took 20 years to reach a valuation of 1 billion. 20 years. Now you have companies like Snapchat that make 2 billion it takes 2 years to make 1 billion. The record is last year. Binance is a company that in 180 days reached a valuation of $2 billion. This is the magnitude of the new world where we are living. And this is the magnitude of the new world. Because this revolution that we have been talking is not like other revolution. In the past, all the scientific revolutions were progressing from bottom to top. We have the scientists claiming to have formula to a product, and then we're going up and up and up. No. This time, this revolution is up to down, because all of our CEOs in our companies, they have the ear is warm, because they have the investors calling every day. Hey, Mr. CEO, where is my Uber? Where is my Uber? I want to make these billions. These are billions that everybody is making. I want to do it. What are you doing? That's why all of this digital revolution is coming from top to down. Because our investors, they know that this death in the stock market, that if you don't do anything, 50% of the companies, Fortune 500, are not going to succeed. These companies, the value in the stock exchange will go down and down, will lower, so their assets will be higher, they will strip out. This is the stock exchange death. And now they're going to start, okay? So while everybody is making billions, what is going on in the oil and gas business? Look, this is what Wood Mackenzie is telling us. Wood Mackenzie is telling us, hey, look the returns of your projects. This is Pope Benedict XVI, Pope Francis. How is possible that the profitability, that the internal rate of return of our projects is below 5%? How is possible? And they say, would you put the money in the oil and gas business, or think about your pension plan? Would you put here? No, it's difficult. But look at Wood Mackenzie, they say, well, it's not because you don't find oil. This is the P sub G. So the success rate, that means the wells that you find positive, is more or less always the same thing, 30%. Okay, one question, one comment. In the 30 years I've been in the oil business, always the average P sub G is 30%. I don't know why. This is a topic for other presentation. But they say, look, the P sub B, the probability of finding an economic well today is lower than 3%. How is possible that you are going to make money in the oil and gas business if our probability of finding an economic oil is less than 3%? Something has to happen. And this is because we have been working 30 years doing the same thing, and now it's time to change. Now digital transformation is everybody's thinking that will allow us to change our business. One of the reasons is because there are companies that are saying, well, I want 100% success rate. For instance, one company saying that. And then, because if you look at this is for the Norwegian Petroleum Directorate, all the oil findings in the continental shelf in Norway. In orange is expected size pre-drill, and in red is post-drill reserves. All the wells, all the discoveries are overestimated systematically. We, the explorers, are overestimating all of our discoveries. This is true in UK as well. You take the statistics. This is true in US. This is true everywhere. Explorers, geology universities are overestimated. This is something happening, and then we need to do something. Okay. So when we are doing this thing of the digital transformation, and you are asking the people that they are doing, not the service companies, not the consultants, now the people that they are investing money, and they say, where do you see the main benefits? And something I want to tell you is this way: geological and geophysical, G&G. Okay? Because I'm Geoscience director, the director for Geoscience technology, I want to concentrate in this aspect, okay? Which is one of the main areas. And then, when you are asking the same people, what is the impact of what you are doing in your business? Two things. First of all, everybody is thinking about faster and better decisions, but look at this. Second place in orange, in 19% in orange, is faster time to oil and gas. Okay? They are not saying predictive maintenance, they are not saying efficiency, these things in the short term, and we are going to look at that. Why is that? Okay, look, this is typical cash flow profile of an upstream business, upstream project. So horizontally, tens of years, vertical is billions of dollars. To me, something striking is to say, okay, first thing is, hey, look at this small blue here. This is the profit, okay? And now the second striking thing is, if I am the president of my company, I would say, why I do technology? What I need is lawyers, because most of this money in negative cash flow are taxes, royalties, and so on. So what is the answer? Why do we need technology? So something for you to consider is, okay, what happens if we spend less CapEx? Okay, or less OPEX. Look at this. This is OPEX. This is CapEx. It's not going to be like big profitability, but reducing these things which already are small. The important thing here for us to consider is, from the time we pick up an asset, an area, to the time we produce the first oil, is half of the life of the project. This thing has to change. Because if we reduce significantly this time, reducing the cycle time, the impact will be billions to increase the NPVs of the projects. Is what we need when we saw. The other thing is, in this area, in this time, what we see is geology and geophysics. We acquire geological data, geophysical data, we process the data, we interpret the data. Most of the things that we do is G&G, geology and geophysics. We need to do faster exploration by doing faster acquisition, faster processing of the data. And this is what we are going to consider now. So, something that we are going to say is that when we acquire the data, let's suppose all the geological data, all the geophysical data that we acquire and we process, there are some people, at the end of the day, what they have to do is interpreting by hand. So you have the seismic data, I don't know how many of you are familiar, but then you have people that sit in a workstation, ladies and gentlemen, picking one by one horizon by other. It takes years. You can make things easier. You can give them tools. We can do everything, but at the end of the day, there is somebody doing most of it by hand. In Repsol, something that we have done is automatic interpretation. Something which is going to be a game changer. It's something I'm telling you. For instance, this is seismic volume that has been interpreted completely by itself. There is no human intervention in this interpretation. So here we have 1,000 square kilometers. The machine itself has interpreted without any human intervention, just hitting a button, boom, 530 faults, 370 iterations in 1.5 hours under $20. This kind of work, one man, if can do it, will take more than 1 year. This person will process only 20% of the data. Why we are acquiring data when spending hundreds of millions of dollars in data if only a human brain can process 20% of the data? And then the machine is unbiased. A person will do it biased because always we have a model in their brain. So here the machine is doing completely unbiased and we have this data. So it's not that we have all the horizons, it's that embedded in these horizons we have all the geology. This thing cannot be doing, it's impossible. It's not 1-2 years of one time. It's impossible that a person can have all of this geology which is embedding the seismic with a human brain. Can be only done by a machine. Now, another technology we have developed. First technology is automatic data-driven seismic interpretation. Now, second technology. This is Norway. This is gas. This is 4 wells drilled. 1 well, 2 wells, 3 wells, 4 wells. The only discovery is this one. The others are dry. With a regular technology, with the commercial technology which is available in the industry, everybody would drill the 3 wells, only 1 is positive. With the technology we have developed that we do inversion of seismic and electromagnetics, the joint inversion, only 1 well is showing gas, which is this one. So with this technology, in a matter of weeks, we can forecast the only positive well, avoiding 3 wells. So now, look at this. Who said that? Who said the arrogant guy that said the key to disrupted by a billion dollar industry is ignorance? Who said that? This is very important because for the next point we have to say that this was said by this gentleman, Masayoshi Son, the richest man in Japan, the 40th most powerful in the world. Why he said that? Because what he said is that when you are going to do this, the approach to things in the digital transformation is not, or we say, fix the existing thing. It's not that you have your sport car and then you're going to upgrade it with an iPhone. With an iPhone. The question here is that what you have to do is completely re-engineer everything. You need to start from scratch. You need to re-engineer. Because something very important when we have this approach to re-engineering society, to re-engineer our industry, is this thing. That was a slide from Darrell Willis, VP of Energy in Google, and he was saying, look, what we can do, what it takes for you 5 years, we can do it in 6 months, or can be done in 6 months. This is accelerating the business cycle. This is. So when he said that, immediately I received several WhatsApps saying, hey, Francisco, look, Darrell Willis is saying what you say, but without any backup. Because what we can do, what they have shown today here, with automatic interpretation, with faster processing, with automatic acquisition of data, is that we say this is exploration 2.0. What if, as I have shown today, 100 days after acquiring the data, with our automatic interpretation, we have all the horizons, we have all the faults, we have all the maps, we have all the geology, and then with our technology for inversion, we have lithology, porosity, and hydrocarbon saturation. This is something that we can do. This is something that is not that we're doing today, but we can do it because we have all the technology. The question is if somebody is going to drill a well with all of this just in 3 months. But technology is there. Something that we have been working 15 years in automatic interpretation, in digital transformation, in artificial intelligence by doing many things. not only seismic interpretation. We do reservoir simulation, field development planning, many things. Something that we have discovered is that, and I'm finishing with that, when you have to re-engineer everything, and it was said, is that we have realized that it's not that we have to look outside the box. Where we try to re-engineer everything and do all of these things that seems impossible, we have discovered that, you know what, there is no box. This is the right approach to do everything in data transformation. There is no box. So this is my takeaway for you. You have to blow your box. If you want to take benefit of all of this data transformation, you have to blow your box and engineer the reality. And the last thing, this is artistical. This is our research center in Barcelona with Barcelona University. So data transformation is also artistic. Okay, thank you very much.
First of all, who's heard of Amazon.com? Good. Who's heard of Amazon Web Services? Wow, that is surprising. Normally, it is just a couple of people that really have no clue what Amazon Web Services is. But yes, Amazon Web Services, all of you are using Amazon Web Services, and I'm actually willing to go out and wager my salary for a whole year that everybody you are using Amazon Web Services. Whether you're using Airbnb, whether you're using Netflix, whether you're actually trading on the New York Stock Exchange, all of you are using in one shape or form Amazon Web Services. But yeah, we are the engine behind Amazon.com, but we're also the engine behind all the other companies I just talked about. So what we're going to talk about today is reinforce what Julian has said and what all the other speakers have said. So there's no lies and everything is true. Yeah. So we're going to talk about innovating in oil and gas and really enabling the industry to, and we just heard it earlier, yeah, it's around transform. It's transformed faster, and it's not doing the same stuff over and over again. I'm going to use probably one of the same analogies that you've seen. This is a very famous picture. This is Fifth Avenue in New York City. It's Easter morning, 1900. The question is, can you spot a car in this picture? I know it's grainy, it goes back to 1900, but I'll give you a clue. There is one car in this picture. Seriously. You can take a loop to investigate, but it's true. Now, consider this. Fast forward 13 years. Same street, same Easter morning. The question is no longer where is the car, the question is where is the horse and buggy gone? So within this time frame of 13 years, this dramatic transformation has happened. Not only did all the horses have to go up into pasture, but now we had to provide the infrastructure. You had to provide tank farms. You had to provide everything else to support this whole new infrastructure. So my premise, and that's what I'm going to leave you with to start off this discussion, is we are at Easter morning 1900. We are just starting this fascinating journey that we're on to embark. Second thing is we talked about the World Economic Forum. Just came out a couple of months ago. This talks about the value. Yeah? On the one hand, we talk about technology. On the other hand, we really want to make sure that we capture the value that comes with that. In this case, what you can see is that the value associated with digital transformation in oil and gas is $1.5 trillion. A lot of that is societal benefit. So what we're going to be focusing on is really on this $750 billion. So it's a lot of value at stake. And the question now is, of course, is what are we going to do and how are we going to capture that value going forward? The reason why I put in this slide is because it provides us also with the market forces that are currently playing out. If you were to predict how much the US were to produce, and we go back to 2008, you would have said, how much would the US produce in 2018? What you would have done, as any good engineer, take a straight ruler, and you would have said, the US would probably produce less than 3 million barrels a year. And everybody would have said, yeah, that's a good estimate, you've done a great job. What we are seeing is, instead of 3 million barrels a day, we're almost at 12 million barrels a day. So So what is happening here? What's happening here is a dramatic transformation in our industry. Yeah, we've seen the onset of shale and shale companies, of smaller operators that are able to work very, very, very nimble. Why is that important? Because now, all of a sudden, what we're seeing is that not the fact that the US is the biggest producer, but now all of a sudden we have a completely different dynamic. Where it used to be completely governed by OPEC, and OPEC would be able to drive prices. Now we're seeing that these smaller operators, and remember there's over 9,000 independent operators in the US, these guys can go on and go off from production within days or weeks. They can hire a rig within a week and start drilling within a week. If the oil price is too low, they can shut down 5, 10, 15 rigs and wells and waiting for the price to pick up again. So all of a sudden, the dynamics where we could to predict, where we looked at really at macro economic scale, is now completely being disrupted by these guys. It's not only in the US, we're seeing the same happening in Canada. In Canada, we're seeing big developments around the LNG side. Canada and the US are all of a sudden now becoming exporters of energy. Can you imagine that, the US becoming an exporter of energy? That has never happened before. It's a fascinating, completely changing the way that we work. So what we need to do is, on the one hand, we have the technology changes, we have the value that we capture, and then the third element is the ability to be agile, to be flexible, because what we are seeing is this world is changing. What I'm going to leave you with is that the cloud is that agile vehicle, is that new tool that you can use to help transform and really be flexible and really be elastic, and be elastic at scale. And I think we completely underestimate how elastic we can be. And then normally, if I have these types of talks, it takes about 2 or 3 hours to give you all these examples. I hope we have some time at the end, Robin, to actually talk you through, just to set your minds what you can do if you had 1 million cores at your disposal to do computational analysis. The amount of change that we're able to affect with this unlimited scale is mind-boggling. And we've seen some of the examples already from Repsol, but that's where we're heading. Good. I get off my high horse, having told you what a little bit the landscape is where we are in our cloud journey, what the value is, but more importantly, the business drivers for driving the cloud is around the elasticity and the scale that we can add. So I'll give you an example where BP has been using the cloud. They've been using the cloud, and this is a public reference, so there's no worry about that. They've been using the cloud for their refinery business. So one of the tools that they use is an optimization tool that looks at what's available in the market, what is my product mix on the downstream side from a chemical perspective or from a gasoline perspective. And they're able to optimize demand and supply for the refineries. And the tool they use for that is called Spiral Suite. They used to run that on-prem in their own data centers. It took them 7 hours to run that very complex algorithm. By moving it to the cloud, they went from 7 hours to 3 hours and 20 seconds, to 3 minutes and 20 seconds. So imagine that, yeah? You come in the office Monday morning, your boss tells you you have to run an optimization, you hit enter, and by the time it's time for tea, time to go home, you finally have your answer. By that time, the market has changed. The market has changed dramatically, both on the supply and both on the demand side. Having the ability now, almost in real time, to run those scenarios, that is truly the transformation. And that's been recognized by BP. And again, the ability comes from the ability to use this elasticity, this unlimited amount of compute power that you normally don't have available in your data centers, but actually using that to flip on and switch off and only use what you need. One example, 7 hours to 3 minutes and 20 seconds. Another example, TransCanada. TransCanada is a really big midstream company. So what they do is they don't explore like Repsol, for instance, but what they do is they take the products that come out of the ground and they ship it to all the relevant markets. And they use that through a very complicated network of pipes. The way that they were managing demand and supply was by a set of Excel spreadsheets. There was one guy who really knew how that spreadsheet worked. Yeah. The problem that faced, of course, is when you look at this infrastructure, it becomes really, really complicated. By using the data that had over 20 years from all the sensors, from all the pipelines, we actually took that data and actually said, you know what, we can help with a machine learning algorithm that actually helps you to understand what is happening on either sides of this pipeline. So now we're using machine learning to take existing data, to harvest the true information from that data, to help them not only create that insight, what they have been doing, but also allows them now to create foresight. And that's what they have been doing. It's actually using that data now on top of their existing network, with their existing pipelines, with their existing sensors that they already have. And the fun part is only just beginning, because now I have an infrastructure, I have a network where I can add in more data sources. I can add in even more weather. I can add in localized weather. I can add in all kinds of other additional sensors. And they're actually talking about even going to the next stage, where they really want to increase the amount of sensors that they have on the network, and getting to that high fidelity part where we can actually use the data and drive even more insights and better predictions. So pretty cool, yeah? But again, here what they are using is their existing data, their existing networks, and there's not a big investment. I think that for the time it took to extract the data from the historian, it's a Pi historian, I think it was in the order of 6 to 7 weeks. Yeah? So we're not talking here about hundreds of thousands of people, and I'm sorry to make sure that the consultants are going to be out of business because of that. But it's a fundamental change. You saw that also in Francisco's example. We can now run compute power for less than $20. That is a mind changer. So really, it enables you to experiment, to play with it. Because the worst case is, if it doesn't work out, well, maybe you've lost $20, and I think your boss will probably forgive you for that. Yeah. So, I'm going to give you another example. And I actually picked 3 examples, a downstream example, a midstream example, and I also want to give you an upstream example. So this upstream example is from Shell. Shell came to us and said, you know what, same challenge as we saw in Repsol. Our geos, our geologists and geophysicists spend 70% of the time just looking for data, collecting the data, analyzing the data, before they can actually start to make head and tails out of it and really start making sense out of it. What can you do to help? Well, we've been helping with what's called a data lake. It's not a data warehouse where it's just one-way traffic, where you dump a bunch of data in there and you never can find it again. In the data lake, we take the original data, whether it's structured or unstructured, and allows us to interconnect the data points using the metadata and building on top of that. That enabled them, now that they have that infrastructure in place, to start using machine learning models. The same way as we've seen in Repsol. So now you can do automatic fault detection. Now you can identify where salt bodies are. Now you can identify where all the interfaces are. It completely transforms the organization. More importantly, it's not just within exploration, but now you can use that same data platform to extend it into wells. Because now, all of a sudden, the stuff that I'm doing in exploration, I can seamlessly hand over to the wells guys, and actually now it's interaction. We're finally moving away from these silos. And I'll speed up a little bit. We've seen this slide from Julian, but in a different format. So really what we're talking about is, what is it that we want to help our customers with? And for me, it's helping our customers with digital transformation. The way that I've structured this slide is, I talked about digital innovation the same way as Julian did. It's an existing service. It's something that already exists, and you're just digitizing it. A good example is, many years ago, you were only able to take a Xerox copy, only get a hard copy. With the onset of the ability to also create a digital copy, you both have now a digital as well as a hard copy. But it really doesn't change the way you work. It really doesn't change any business model. It's very localized. Digital innovation. Digital disruption, same way as Julian talked about, it's different business models. It's the Airbnbs of this world. It's the Ubers and the Lyfts and the Netflix of this world. Something that's completely different that didn't exist. What I think the biggest value is actually in digital transformation. It is how we change the way that we work internally in the organization, and how is that helping us drive the value. It's the example that we've seen from Repsol. It's the example that we've seen from Shell with the SDU. It changes completely the way that we work and the way that we interact. And that's where we drive a lot of the value from. Machine learning, again, I'm going to pick on Julian. We talked a lot about machine learning. Machine learning is a fantastic tool, but it is a tool. It's a tool that allows us to provide some hindsight, some analysis, insight, but also foresight. Now that we have all those three combined, we can also now use it to automate. So that is what we're seeing a lot of the value is coming from, the ability to go now to, and I'll give you one example. This is an example. We talked about the shale boom. This is an operator that works in the heart of the shale boom in the US, in Midland, Texas. It's in the Permian. 6,000 wells, and the majority are these beam pumped wells. They came to us and said, help us improve our mean time to failure. Okay, you have a lot of data, you have a lot of history, and it's relatively simple. In a couple of weeks, we can actually have a real good model that helps you to predict when your equipment is going to fail. So, great success, yeah? So, we've reduced the mean time to failure. There's no more production outages. There's no more calls Sunday morning at 3 a.m. Hey, my best well has stopped producing. What can we do? We need to work over hoist and all the problems that come with it. I'm actually going to argue with it that this is not a great example. And the reason why it's not a great example is because we are not connecting the entire value chain. Now that I know exactly when my product is going to fail, when I need to order new equipment, what I should be doing, and Julian talked about it as well, is actually connect that value chain. Is how do I get now that same amount of data to my suppliers? How can I now integrate my supply chain into that whole process? That is where the true transformation is going to happen, and that's where the true amount of value is going to come from. Just to highlight that point, everybody's talking about the digital supply chain, and everybody knows that there's value there. It's so intuitive. But when you start to dig deeper, only 48% of the people are actually doing stuff. And the reason why they're not being successful is because we're doing the same stuff over and over again. We need to blow up the box, yeah? And we need to do something completely different. And if we're able to do that completely different, you can see that there is value that is being created, not just by the supplier, but that value can actually be shared across the value chain. And that is what I'm a big proponent for. Same way that Julian was talking about it, what we're trying to go to this next stage. It's called network orchestrators. It's the organization, it's the people that are working together where they are sharing that information. Unfortunately, it's not something that I came up with. It comes from the Harvard Business Review, and it goes back to 2014. But more importantly, there's a great article that actually shows where the value is and how much the value is created. But if you look at these different paradigms. Network orchestrators. So, how do we get there? Well, one way to get there is to innovate. And then what I wanted to share with you in the last 4 minutes is a quick overview of how we innovate at Amazon. And the reason why I want to do that is because we have a bit of a history around innovation. We're a company that's just over 20 years old. Amazon Web Services. We were the ones that invented effectively the cloud. Yeah. Kindle. Probably people are using Kindles here. Yeah. I don't know whether Alexa Go, we heard it earlier. Amazon Go stores. Who's ever heard of the Amazon Go stores? Good example. Yeah. But again, there's another example where we're innovating. And what drives our innovation is our very single focus is around how can we make the life of customers easier. If that means that you don't have to stand in line for checkout, then we'll develop the Amazon Go store to go with that. But it's the technology behind it that makes it all work. So how do we get there? Well, again, this is a presentation that normally takes 2 or 3 hours, so I'm going to spend 3 slides on it and really touch on the high points. This is effectively our cookbook, how we do our innovation. The key part of it really is around mechanisms, culture, organization, and I'm not going to talk about architecture because it really talks about some of the IT tools that we have, but I'm going to touch briefly upon some of the other elements. So, one of the mechanisms we have is what we call our working backwards process. It really starts off with asking the question, what is it that our customer needs? I used to run global R&D for deep water in Shell, and I was really proud of what my team were doing. We were doing all these patents, and I would go to my projects folks and would say, hey, we got this really nice patent, you should use it on your next project. They always say, no, it's too risky, I'm not going to do it. Yeah? So it was very disappointing that we had all these patents and nothing came out of it. In Amazon, it's the other way around. We don't start with, here's the solution, here's the technology. We start by asking, what is the problem? And we're using these five questions to frame it, and actually really dive deep in understanding what the problem is. And because by doing that, we are able to come with quick solutions that we can implement really quickly. So working backwards is really, really integral into the way that we work. Secondly, which is an absolute mind-boggling concept for oil and gas. This is a letter that my boss, Jeff Bezos, wrote in 2015 to the shareholders. I want to focus on failure. In this digital age, you can fail and you have to fail. You have to spend the $20 and try something new. This is not like we're drilling a deep water well offshore Kenya where you don't have the ability to fail because you have to succeed. But the beauty about these two-way doors, as we call them in Amazon, allows you to fail. So cultivating a culture where failure is good is very difficult because we've been telling all the people in our organization, thou shalt not fail. And we're going to have systems and processes in place with basis for designs, with asset reviews, with all kinds of other systems to make sure that you do not fail. So how do you create a culture where failure is not only accepted, but actually failure is actually stimulated? The last thing I wanted to talk to you about is how we're organized. And we're organized around two pizza teams. Similar to what Julian was highlighting on. We are very small, decentralized teams. An average two pizza team, an average team in Amazon is between 8 and 10 people. It's enough to feed by 2 pizzas. Yeah, that's the reason why we call them two pizza teams. But what it does, it allows you to be very focused on your product. It allows you to be very flexible and being able to adapt and innovate. And also, it comes with the fact you build, you own, yeah, which of course is another big change in the way that we've been thinking about all these things. I know we're running out of time, and that's the reason I want to thank you. So if we have ample time, we can talk about another 1,000 examples, but just want to give an overview of what are we doing in Amazon Web Services, what are some of the use cases that we're seeing, but more importantly, I'd like to have your help in helping to change our industry and try to move towards this connected value chain where we can have these network orchestrators and really start to reap the benefit, whether it's the $1.5 trillion or even the $750 billion. But I think that would be an interesting prize for us all to pursue. Thank you for your time.
Let me just kick this off. I'd really just like you to talk about some of the things that you found interesting in your presentations. And really, for me, I'm a simple guy with pictures, and Francisco, your picture of the iPod in the car, as opposed to totally transforming the car when you can see the whole thing, really sort of summed up to me a commonality that you all shared. So I can really see that coming in terms of everyone talking about the need to totally transform the organisation. Okay, so that's a commonality. Gentlemen, what did you see that was different about some of the things that each of you pointed out? What did you learn that you hadn't expected, that you saw as a different insight?
So for me, actually, it was the opposite. I was extremely surprised that almost the messages were almost very, very similar. Yeah, I didn't see any people out in left field. So therefore, by inference, it was the right message.
Well, that's one way of looking at it. So, very flattering. So, I mean, a few things that struck me. So, the comments you made about the culture within your organisation I found fascinating. I also found that I'm not a hardcore oil and gas man like our Repsol colleague. That's quite a shift in mindset, trying to change an organisation. So that struck me. I was interested in everything that Francesca was talking about. I was just curious to know the data that shows the way you do AI and seismic, how it translates into exploration performance. Have you seen a quantum leap in your success rate? I half know the answer, but I was curious to know.
Something very important. First of all, it's about a cultural transformation. First of all, it is not an evolution, it's a transformation. It's a digital transformation. The second thing, and I agree with you, has to do completely with culture in the organization. If you don't change the culture in the organization, you're not going to succeed. Just by having the technology ready to go, you're not going to succeed. If you don't have the people engaged, you are not going to do, because at the end of the day, everything will be implemented and performed by the people, and because of the fear or something, that thing may never happen. Okay? Now, about the results, okay, you have to see sorry, I'm going to say something very. We have an updated strategic plan. So our CEO communicated to the market a couple of months ago, and this is what we are saying. What we are saying is that we are currently producing 750,000 barrels per day. We are not going to produce any more barrels per day. We have currently 8 years reserves, production reserves. We are not going to increase the amount of reserves. But you know what we're going to do? We are going to increase your profit to the shareholders by 20%. The dividend, 20%. This is what we are saying. We are. So we say that because definitely we are building everything based on technology, digital transformation, and of course innovative management. These are the 3 pillars of our strategic plan. And the question is, I want to say something here about this. It's like we are saying to the market, hey, we are going to be the Amazon of the oil and gas. This is what we are saying, because at the end of the day, I'm really surprised when Amazon acquired the Whole Foods chain in the US. Whole Foods, very good chain, organic food, everything very expensive. Immediately, everything went down 50%. Yeah. Why? Because Amazon is very efficient. What Amazon is doing with all of this digital transformation from the beginning is to be efficient. So this is what we are saying, and we are having our success as the company that we are posting. We are posting the 8 years results just based on efficiency. In an area where the downturn of the business, we are having our best results in 8 years. Because of this is the impact. Is that we are increasing the dividend to our shareholders by 20%. This is the impact, no?
What did, as someone that isn't the practitioner that our frequents are, what did you note? What struck you particularly?
I mean, 2 observations. One is indeed more similarity than perhaps I would expect. I mean, I noticed that you're using slightly different words than me, but exactly the same concepts. But the second point, and this is more just it's more of a question than a statement, but if you draw a spectrum from industries which have been completely disrupted beyond recognition by technology, so the traditional photography industry, right, where Kodak and Polaroid and etc. no longer exist, through to industries where technology has been incorporated into the activities of existing incumbent major players. Retail banking, at least in Europe, it's exactly the same banks running the show, retail banks running the show in this country as 40 years ago. Despite all the talk about banking being disrupted, it's still Barclays and Lloyds and RBS and so forth. And it's the same in most of Europe. I mean, China may be a bit different. But my point is, that's a spectrum from incumbents continue to dominate despite technology to incumbents completely wiped out by technology. The question is, where on that spectrum is the energy industry really, right? Because we tend to kind of learn these lessons about, oh my God, we're going to be the next Kodak. But if I look at your industry as an outsider, I see actually an awful lot of stability in terms of which companies are continuing to run the show. Because there are certain things that you can do that the world will always need, and there are certain relationships with certain customer suppliers which will endure despite technology. So
let me challenge it a little
Go
bit,
on.
Julian. And I think the examples that Fernando shared are not the examples by the current incumbents.
Right.
And I'm going to go out on a limb that a lot of the stuff is either done in-house or is done with very small startups that have that with very specialized knowledge. We actually are seeing that the existing ecosystem still believes that they have to stick to their proprietary protocols. In this day and age, if you're sticking to proprietary protocols, I think it's going to be self-fulfilling prophecy where you're going to be out of business in relatively short time.
I have something to say is that there is a report by Deloitte where it's talking about the fuse and the bang. And basically what it says, analyzing, is that the time for the oil and gas is now. It's not that we are behind, it's that the time is now. So the time is now, and if we don't do it right now, we are going to miss the train. So I don't think that in oil and gas we are behind. Is that because of there is a second wave? No. Now the question is, when we are embracing technology, it's not that we are embracing technology once. For instance, we always say Netflix, but Netflix, you need to realize that Netflix started mailing DVDs in mail, and now they are doing online streaming. So from different, they have to reinvent themselves different times during the same revolution. So this is happening to us. We are in Repsol in particular, we started 15 years ago, we have to do different things. And something I agree with you is that in particular the technology that they have shown here is in-house, is proprietary. This is true. So there is something that we need to go, is that from the proprietary technology we need to go to co-opetition, where we cooperate with our competitors, co-opetition, and this is something that probably is the second phase of the, like Netflix, from mailing DVDs, from streaming, is from doing proprietary technology to do co-opetition with other companies.
If I may interrupt, because I can see there are some people in the audience who would very much like to ask questions. Remember, one question a person, nice and short, please. What I'll do is I'll take one question from each block and then ask our guests if they would like to answer anything. Does anybody over here like to ask a question? Please, sir.
It's an extension of, I think, Julian, your observation, is that all the examples we've seen are sort of internet-born companies, right, which are really leading the way. If you think about the industrial world, one company which I've been stated as an example, the GE, which tried to kind of become a platform business, and you know what happens to the stock price, they've lost their core, either at the or the second. So just kind of thoughts and reflections and saying, is that, I guess, also causing some fear factor and saying, can these big kind of industrial giants really change, or is it still 10, 15 years for it?
So before we answer that question, I'll just go and take another two and then allow you to pick what you like. Ma'am.
In your opinion, what is the timeline when we would be able to accurately predict supply and demand based worldwide, based on the machine learning algorithm, specifically on satellite data?
Thank you very much. And the lady in this, no, in that case, sir, please.
I know a couple slides that reference the conversion of OPEX and CAPEX, and I guess my quick question is, as most oil and gas executives are compensated, incentivized by volume, not net back or margin, could you offer some, I guess, insight into how you can bridge that gap in terms of having financial sponsors at the top for technological adoption?
So, Arno, perhaps you'd like to pick something and give some comments on it.
I'd like to. I'm not going to give an answer. But what I will say is, no. It wasn't meant as a flippant remark. Prior to starting this meeting, actually shared with you a couple of articles that came out in the US in recent weeks, and actually talked about how harmful tech is to the environment. And the punchline is we're seeing all these tech companies like Amazon helping oil and gas companies, and oil and gas companies are destroying the world. For me, that is such a naive example, and the reason for that is we know that for this year we're probably going to be needing, from a demand perspective, at least 100 million barrels of oil, and we're probably going to be needing 4 trillion cubic meters by 2020 just to meet the demand side. So the fact that the demand is going to grow, and it's going to grow about 2-3% even with all the green initiatives that we're doing. It is, I think, upon us, almost as a social responsibility, to help drive and find oil faster, cheaper, better, with a lower impact. So that's probably, I think, where machine learning will help us. It's probably not going to help in predict where the demand and supply is going to be, but I think it's going to help us in making sure that we do not run out of oil and gas, and that we do not have to go back to, in particular, the growing nations in Asia. We have to tell them, no, you cannot grow, or you cannot use the energy that we're having. Yeah.
Francisco, would you care to say that?
Yeah, something very important, as you said, look, I am very proud to work in the oil business. I'm very proud of that. I have to say that maybe we don't have very good corporate image about that, as you were saying, but what we are working on that is that, assuming that we did in last year in Copenhagen, but we got together 13 companies, top executives, in that we are in the energy transition towards a low carbon footprint energy for everybody, and the question is that we need talent. And then the question is to challenge young people, we need your talent for this energy transition. This is something very important. The other thing, answer to your question, is now we are facing a time where the technology is part of the big table. So now we have the right to sit down in the big table, where, of course, I think that all these kind of things, technology is going to be more and more important, because at the end of the day, what I said is that this is coming top to down. So are the investors, are the shareholders which are claiming the technology to the CEOs, and this is something very important.
So for the next 3 questions, I'm going to ask Julian and Adrian to answer these, if you would, but perhaps Chris, do you have a question?
Yeah,
but
sure.
Chris, I might say, is the joint president of the Alumni Energy Club. That doesn't mean to say your question doesn't need to be short and sharp.
No, you know me too well. We'll keep it very brief. A lot of the conversations we've had today have been about improving efficiencies and trying to make the systems, the old systems, work an awful lot better. Just going back, Francisco, to your slide on the wonderful Times Square slide, where over the space of 13 years we had, wrong presentation, but the Times Square slide where you had, over the space of 13 years, horses to cars. Do you, just the opinion of the panel without making any judgments on it, is this not a question of us focusing on trying to make a better horse rather than trying to change our energy towards the car? Are we not going through an energy transition, and we're better off having a look at the car rather than make it a better horse?
Thank you. Just before we go, so anybody else would like to ask a question? Sir.
Yeah, back to your point about the stability of the current incumbents in the oil and gas business. I would ask you guys, do you think that Amazon will be the oil and gas company of the future?
No.
So let me then, just before we come back, is there any other question you'd like to ask from here? Then in that case, please, sir.
Just a quick question about culture and this ability to fail. There's certain parts of the upstream oil business, drilling, fuel development, operations, where failure is really not an option. How do you get the two cultures to coexist? We've got systems and processes that prevent failure, and ones that we can encourage failure.
Thank you very much. Julian, would you like
I'll
to
make a quick observation linking the question over there to the question that was here. Because there are very few examples of traditional incumbents who completely invented themselves. I mean, they exist. You know, I can think of a couple of media companies which were 100% paper and are now 100% digital. Usually what happens is the incumbents have to work very hard to survive if the world really does move super digital. But survival, of course, isn't enough, right? And this is really to your question, which is, you know, we're not expecting Amazon to, of course, to enter the energy industry as such, but there's this expression to be Amazoned, in other words, to have your industry to be affected by Amazon's huge power in a number of different ways. And so a Google or an Amazon doesn't have to enter your industry to disrupt the profitability of your industry. Because, you know, I've got, for example, a friend in the hotel industry. Now, he doesn't worry about Airbnb because people will always need big hotels for conferences and things. He worries much more about Booking.com, right? Because what's Booking.com doing is just skimming a big chunk of margin away from their profitability. Right? They don't. Booking.com isn't in their industry as such. They're in the bigger system. And so, for me, what the energy companies have to worry about is not whether they're going to be disrupted in the way of the world doesn't need energy anymore. Of course, it always needs a lot of traditional energy as well as renewables. The worry is, will these other companies come in and slice off profit here, profit there, and actually affect your ability to be successful? So anyway, that's my quick observations from, again, from the neutral industry, non-industry observer.
And Adrian, no pressure, but there's two things. One, you do have the final comments to make, and two, you are standing between everybody else and being concluded.
Oh, great. So I'm a sticker for detail, so I do want to answer those two questions, and then talk about the culture and the energy transition question. So lots of answers, but very briefly. At the end of the day, I think all these companies will be driven by what the consumer wants. So I think your point there, that's the rationale. The oil and gas industry is interesting because its consumers are somewhat different, yeah? The government, for example. There are other oil and gas companies. It's only on the downstream business you have that retail experience there, yeah? So I think they will change it, but they're somewhat insulated, yeah? So that's one thing. I think on your point there, I would beg to differ, because I think you made the point that the focus of chief execs is on volume. Well, it used to be. I mean, as I was explaining earlier, up to 2014, a lot of these oil and gas companies, they were measured on their production growth. Yeah, 3-7% growth. That was great. What shifted in the industry, they're now measured on quality over volume. Yeah, so like, what's your return on capital? How efficient you are? And that's where digital is interesting, because I think if you can demonstrate that you can operate more efficiently, that's a value that your shareholders would appreciate. One of the things that we haven't talked about, I mean, the Repsol is a great example, the industry has not done a great job, because I think it's still going through a proof of concept of articulating what is the value of digital. We have implemented these solutions, and our processes are 20% better, our production is 5% better. You get some companies alluding to that. When do they get to the point where they can define it and articulate a dollar value, that would be much more compelling. On the exploration, the cultural stuff that you mentioned, what was going through my mind is, this is an industry that is incredibly sensitive to the risk of hazardous failure. So Macondo is the word that no one's mentioned. Nobody wants that. And with social media these days, if you cast your minds back to Brent Spar, those of you been around long enough, people voted with their feet back then and boycotted Shell, and Shell had to reverse what was an economically sound decision. Imagine now with social media, you don't stand a chance. So there is a hesitancy, I think, in the industry about how far you take this until they feel comfortable. And the last comment, just in terms of the transformation, you're right. I think it is an industry dominated by incumbents and part of the value chain. There are examples of companies that have taken a full transformation. So if you think of Dong, which was historically an oil and gas company, in fact, I think if you go back far enough, it was an explosive industry company, but they went into oil and gas. They built up a wind business, and they used the oil and gas business as a legacy business to fund the wind. They divested the oil and gas business, and now they're a clean tech player. There's not a lot of examples, but that's kind of a radical one. And to be fair to Shell's making a big shift there in terms of developing its new energy portfolio. CapEx spend is a fraction of what their legacy business is, but they're making that shift because at the end of the day, they're responding to consumers.
Thank you very much. So it leaves me to close out. So I introduced this to begin with, saying I really wanted to get a better understanding of this, and I bring 4 experts along to share their stories with us. And the 4 stories have led me with this conclusion. It's simply 2 pictures. The first one, Arno. The first one is your picture of the buggies and the cars, and 13 years later. And so one of my questions for me in my career is, how important to me is this change? Hell, I still hope to be working in 13 years. Damn important. Really, really important. This is going to have changes for each one of us in this room that is involved in oil and gas or in any industry. And that's one of the things that I take away from this. And the second is, how should I respond, and how should I be looking to respond? And Francisco, your image of the iPad sitting on front of the car is something that's going to stay with me for quite some time, as opposed to the car that's totally integrated, that has information technology as its centre. And I'm not sure how that finally grounds out for me. I'm not sure where that takes me, but it's given me something to think about, and it's given me some models to start thinking about this. So that's the first point. The final point is to say, leaves it to me to be able to thank Adrian, Julian, Francisco and Arno for their participation today. But I would particularly like to thank Francisco and Arno for flying in for this, which is really service above the means. And I'll ask you to just give them a hand of applause. So Francisco, as Director for Technology at Repsol, we've had some really interesting discussions about the future of big data and cloud on the work that you do, particularly in the exploration space in Repsol. Can you tell me how and why you think this technology is going to be able to transform the way that Repsol works with data to allow them to be able to mature hydrocarbon assets?
Okay. So first of all, I have to say that once somebody is deciding to go to the cloud, you need to be a reason to do that. Could be any reason, but you need a reason. You're not doing that just because it's the hike, or because everybody is doing. For us in Repsol, we have two main reasons. One of them is, of course, for better and faster oil. That means
better and faster
oil,
okay.
to accelerate our business cycle. So yeah, we need to reduce significantly the time it takes for us since we pick up an area to the first oil. So in that we will improve in our MPVs, of course, of the projects, and the other is to have better barrels, which is more efficient oil. So this is the first reason. The second reason is because thanks to the cloud, we are doing something very important for us, which is democratizing technology. All technology that has been used in the past by our super experts in Houston, that they were able to use just because they had a high performance computing available to them, now we are making available to everybody. Because today we have highest performance computing through the cloud for everybody.
Okay, so can I just make sure I understand this? What you're saying is that you're looking to be able to democratize the access to technology resources. And if I'm right, are you then saying that in the past what had happened is you had big computing assets that people had to book, and it was a huge effort to be able to get onto them and be able to get that stuff to work, but that what you've done now is made that technology through the cloud available for everybody to be using, is that right?
Yeah, more or less, because what happened is that the infrastructure of a supercomputer is very expensive. You make only one in one place. For instance, for us was in Houston, in Madrid. So now, instead of having 30, 60 supercomputers worldwide, which is very expensive, we just have one, which is the cloud. So you have access to supercomputing through the cloud. Because of that, we can put all of our proprietary technology that requires supercomputing available to everybody. Instead of having 15, 20 specialists, now we have 500 specialists.
Okay, so I'm not an expert like you in the cloud, but I've known in the past that to use this high performance technology, you needed to be specially trained. So how is it that you're allowing that value to be delivered by everybody? I mean, don't you have to be sort of like 6 years working with this stuff before you can use it?
This question.
Okay.
What we are talking about democratizing technology is that first of all, we are having supercomputing available to everybody, but we are give to everybody, to all of our specialists, like an iPhone. It's like a geoscientific iPhone in which you only need one button. It's like the iPhone. How many things you can do today that in the past you were able only be possible to do high specialized people, and today they are using one button, the button of an iPhone. It's the same thing. What we are making everything accessible is not because it's the supercomputing, is the way interacting this person with the technology. You don't need to be able to be a super specialist. Any person with basic training will have the experience of being a specialist. Is what we say. Now in your workplace you're going to have the experience of being a specialist.
So that's interesting. So if I understand you right, what you've said is that you are changing the way that technology interacts with people, so that you're investing so that people can then start to actually use it, and you don't have to have all of that training. So that's a huge investment, not only in the infrastructure, but also then in rewriting all of this information.
Yes, of course. Because today we are facing the same situation we faced with Gutenberg invented the print. At that time there were people saying, oh, how is it possible that you are printing books?
Yes.
You need a very deep knowledge. We have been talking about, yes, one monk all the year mining these books. I'm the super specialist. And then you say, probably you don't have the deep, but thanks to the print you will have the possibility of reading tens, hundreds of books. Today is the same thing. Maybe you don't have the super specialist, but this person will have the accessibility to tens of technologies, and at the end of the day, the whole, the company of course, but the humankind will benefit for the fact that now technology is not for these very geeks, this person super specialist. You can have the experience of being a specialist. This is the main thing.
So that gives me two questions. The first is that what you've said is that we're going to increase the power that's available to everybody, and the second is we're going to make this technology usable, available to everybody.
Yes, of course.
But everyone, when they talk about the cloud, talks about the ability of better analytics and artificial intelligence to apply things. So what is your strategy for combining a more effective person with more effective and insightful technology? How are you approaching that?
Okay, first of all, people has to lose the fear to the cloud. So now people is thinking that because of all of these technologies available to everybody, maybe they may fear some sort of in the future of losing job or anything. But this is not the case. First of all, what we need to do is what we are doing in Repsol, for instance, is a huge campaign about to change the culture, because now the culture that we are improving is the culture of efficiency, the culture of having collaboration, remote collaboration, people and people. So when you are talking about these things, we are improving, we are changing, we are empowering the people in the sense of empowering of Kawasaki of the culture of innovation, is that we are creating an environment where they can create, where they can innovate in the job.
Okay, so this then brings me to my last question. There is the impression that oil and gas companies are, well, kind of old, grey-haired, stodgy and slow to adopt technology. But the story that you've been saying in this conversation is something of a company that's reaching out and doing what they can to grasp technical innovation and make something happen with it in their company. So, Francisco, why Repsol? Why has Repsol decided to undertake this journey? And how are you being effective doing it?
First of all, I have to say that maybe in general in the oil and gas industry, we have not been able to inform everybody, to make aware of the huge amount of technology that is involved in our operations day to day. This is the first of all. Second thing, we are facing a big challenge. We as Repsol in particular, and then in general in the oil industry, is that we are moving towards an energy transition, towards a low carbon footprint energy. In order to do that, we need technology. We need technology, and we think that digital transformation will enable us to do that. And the other important thing is that all of these young people, that they have talent, we need to attract this talent. Sometimes people are telling us, hey, you are like this, like that, some sort of not very good corporate image. But the question is, in order to do the transitions towards a clean energy, towards a low carbon footprint energy, we need your talent. So instead of complaining, just come and work with us and let us know how you're going to do it with us.
That's brilliant. Thank you very much. Thank you very much for your time. So Arno, I just finished doing a value consulting engagement with Blueware, a strategic partner of yours. And if I can be honest, I was a little surprised to actually see Amazon Web Service being involved in oil and gas and big data. Surprised, shocked. Tell me a little bit about this journey. How did you end up there, and why are you so aggressively, and you are aggressively, why are you so aggressively seeking entry into the oil and gas space?
So let me first explain a little bit what Amazon Web Services is. Everybody probably knows Amazon.com, our retailer, and we ship packages. We're pretty good at shipping packages, but the engine, the logic, the IT infrastructure, the software, the whole brains behind it, that's all driven by Amazon Web Services. So a lot of people associate us with an IT service provider, which is true, and a lot of our engagements start with our customers around an IT service provision. And it normally starts around the question is, I have a big data center. How can I optimize and how can I manage that? And that is normally normally the first engagements where we have with our customers, where they really want to move some of the IT hardware and move it from on-prem into the cloud. And from there, it creates all kinds of more and fascinating use cases. One of the key things that we do is we look after our customers, and normally it helps them drive down CapEx and helps them drive down OpEx. Yeah?
Yes.
The reason why we're in oil and gas is because our customers ask us to be in oil and gas. We are very customer focused. It's our mission statement, and we help our customers innovate, transform across the entire value chain, whether it's from upstream to midstream to downstream to retailing and also including trading, for instance.
Okay, so you've got a lot of experience in oil and gas before you came to AWS. So it may just be a little difficult to answer this question, but what does Amazon Web Service find that's different or particularly challenging about the oil and gas business?
I think the oil and gas business is unique. First of all, it's a real global phenomenon. Whether you're in Malaysia, whether you're in South America, whether you're in North America, we are global. It actually fits our profile. Yeah? Amazon.com or Amazon Web Services, we are a global company, and we've got our operations all over the world.
Yeah.
I don't think there's anything specifically that's difficult around oil and gas. I think the real challenge is to work with our customers and understand where their challenges are. Within Amazon Web Services, which by the way is a $30 billion run rate, $30 billion current yearly run rate. Yeah? It means that we're not just in one or two industries, but we have the broadest enterprise customers, we've got the broadest public sector customers, and we also have the broadest startup community. So in other words, we are working in almost every vertical that you can imagine, whether it's healthcare, whether it's life science, whether it's financial services, or whether it's oil and gas. And what we do is all of those services, which are at the moment are over 150 different services that are applicable to any of those verticals, we can use those services also in oil and gas, whether it's around machine learning, whether it's around IoT, whether it's around traditional compute and traditional storage. All of those services that are available to all the other verticals are also available to our oil and gas customers, including, and which is probably the most important part, is around security. We have the most secure platform, and the way that we look at security, in particular for our oil and gas companies, is that security is in our view, is a shared responsibility. We provide the infrastructure, we provide the tools, we provide the encryption to make it as secure as possible for a lot of the three-letter acronym companies that we work for in the public sector environment. But it also requires our customers also to follow the right protocols to make the data secure. And we do believe that with the cloud, you can actually get more security than you currently have on your on-prem.
So if I take the prejudiced view that security, cost reduction, capex reduction, opex reduction, and management are all the things that I expect to get with you in terms of the base level delivery of being a partner of AWS, what particularly in the oil and gas space do you find is useful in terms of value creation? Where do you, once you've got into a company and they'll engage with you for those cost-saving reasons, what do you then do to actually start increasing their value delivery?
There's a fantastic report out from the World Economic Forum that specifies that the digital transformation in oil and gas is approximately $1.5 trillion associated with it.
Sorry, how much was that?
$1.5 trillion. And about half of that is associated with what they call digital assets. Okay. The way that we look at AWS and how we help our customers generate that value and capitalize on that value that is clearly there is beyond the domain solutions. Yeah? Whether it's a solution for reservoir engineering, whether it's a solution for IoT on a pipeline, or whether it's to optimize a refinery, where we do see a lot of traction and more value is if we can connect the various domains. So we're talking about the connected value chain. So when we look, for instance, at an organization that has done very well in for instance, use machine learning to use preventative maintenance and predictive maintenance, the connected value chain is to now use that same insight to extend it into supply chain. And also making sure there's not only supply chain within their own organization, but also externally. And the mental model that we use for that is we talk about network orchestrators. So what we try to do is actually foster this idea that we can have this connected value chain both internally and externally to organizations that actually can capitalize on the value.
So you're not just looking at enabling the digital oil field, which has been spoken about for the last 30 years. You're talking about enabling the digital value chain from the oil field to the pump.
And it really is across domains. What we have seen traditionally in oil and gas, that has been very domain specific. You had the geos living in their own world, you had the well engineers living in their own world, the project and operations people lived in their own world. We are seeing now, with the onset of the tools that we have, that we are now finally connecting all these different domains. So it's no longer siloed, and we finally have broken through that mental barrier also, that we can now connect the data. The bigger change that we are seeing is now associated with an organizational change. So what does that do, and how does it affect the organization, that now all of a sudden you are able to share, let's say only already internally, a lot of data and generate value and insight from that, but how can you now extend it even further into your suppliers, into your other customers?
So I've worked with a number of different oil companies and service companies in my time, and I as you're describing the digitization of the value delivery chain, I'm thinking to myself, some companies might be better and some companies might be worse at being able to adopt that. Yeah. Could you, just as we close out this interview, could you spend a moment on talking to me about how you've seen really good adoption strategies that you've seen help the delivery of your services in their business?
What we do see is that the most successful companies who go and really reap the benefits of this digital transformation, they have a very strong top-down management vision. They have a management vision that is permeating the whole organization, said we will be a digital company. Yes. The second thing what they do is they go like, we are going all in. It is not like just dipping your toe here and there, but actually making a very conscious decision to go all in. A good example for us is Rio Tinto. Rio Tinto a couple of years ago made the decision with very strong management support, with the desire to go and being an all-in digital company. It completely transformed the operations. Yeah? That's a good example where you need the leadership, where you need the vision, and then follow through by being all in to capture that.
Leadership, vision, action, shareholder returns.
And we know the benefits for the shareholder returns. Just to complete the circle again, going back to the World Economic Forum, if there is $1.5 trillion in value there, I think we have an obligation to help our customers, help create that value. Not only for their organizations, but as you said, also for society and also for our shareholders.
Sounds like you are going to have a very interesting couple of years going along this journey, and I wish you every success.
And we're just at the start of this journey.
Yeah, we absolutely are. Thank you very much for your time. Thank you. So Adrian, good to see you again. So we've just finished doing an interview with Arno. The conclusion for this, for AWS, the conclusion for this, he said, one of the things that's really important, it's an attribute of successful clients, is strategic vision and commitment for the managers, from the managers and the executives, delivery into a clear plan, follow through from action so that you deliver shareholder value to your clients. As a director of research with PwC Strategy and, can you share with us your experiences of working with clients and seeing how, and tell us something about the attributes of successful cloud implementation that you've seen in oil and gas?
So great to be speaking to you again, Robin. So I think the key message to get across is that when we talk about digital solutions and digital technologies, it's all about business transformation. So sometimes the temptation is to think of a whizzy technology that addresses a certain issue and you implement it, and that's not what you should be doing. At the end of the day, a lot of these oil and gas companies, operators, oil field service companies, they have a problem that they're trying to fix, and they need to work out what's the best technology that fixes that problem. And as soon as you start implementing digital solutions, so whether it's drones, AI, automation, you're fundamentally changing your business model, and therefore you need to think about how do you change your strategy, how do you change your culture, how do you change your operating model, your processes, and it rapidly becomes a business transformation. So it shouldn't be underestimated. Digital technologies would be critical for the long-term success of the oil and gas industry, but it is a major challenge for them.
And in that challenge, what do you, okay, so it is a major challenge for them. Tell me a little bit more about the experiences you've seen with people as they try grappling with that. Because we've all seen, the majority of change initiatives fail. And I'm sure that when they're major, like re-engineering the entire organization, as you've just said, perhaps more of them fail than others. Can you tell me some of the things that you've seen that are attributes of more successful companies?
So we've worked with a lot of oil and gas clients, taking them through that whole digital journey. And many of them are starting from zero. So it's quite a good benchmark to work out what are the lessons learned. So I think some of the lessons learned from some of the thought leadership that we've produced is you need to figure out what is your strategy, what's the area that you want to play in first, what's your core competency, how does digital address that. Start small, fail small, fail fast, and then scale up. So one of the most successful areas is thinking about pilots that you can roll out across the organization and experiment with digital solutions. See which ones work. If they work well, you need to scale them up pretty quickly. And I think also it needs to be something across the whole organization. You can start off perhaps with a business unit or a small part of the business, but it needs to impact the whole of the business.
Can you give me some examples of the sorts of functionality that go throughout an entire organization that you'd select? And tell me something about how those have actually helped improve life for people in the organization. And for shareholders, of course.
Yeah, no, absolutely. So I think, in terms of the areas where we've certainly been heavily involved is mostly in the upstream business. So looking at various parts of the value chain in the upstream business, particularly on the operator side, and typically on small, medium-sized players. When you think about it, if you look at like the oil majors, without mentioning names, a lot of these players have significant capital to spend on these type of investments. And therefore they can do everything from data lakes, buying, investing in artificial intelligence organizations, etc. And therefore the players that we look at, what we tend to do is look at the players around you, the companies around you. Each one of these companies is particularly good in an area. So what do you like? What would you like to emulate? How does it fit with your capabilities and your culture? And then focus on that. In terms of the benefits of digital, it ranges from a whole span of areas, from anything as simple as improved data management, which is nothing particularly sophisticated.
It is about one of the least sexy parts of what business in oil and gas is. Let's be truthful.
Certainly the least, possibly one of the lesser attractive aspects, but kind of fundamental if you think about the amount of data that's generated in all these organizations. So having a way to capture it, distill it, cleanse it, and make it available to a broader audience, that's pretty compelling. And that's one of the lessons learned there. It's not all about the whizzy technology. It's about grabbing the insights and making it available to the organization. And then you can go right through the spectrum to automation of processes that then address not only cost reduction, because one of the main drivers of the whole digital revolution is cost reduction, but the other driver is improved health and safety, and this is a critical part of the industry. So if you can develop technologies that take away people from the front line and lessen their exposure to hazardous conditions, that's a big upside.
So you're reducing cost, reducing HSE, creating value that hasn't been presented before. Does that have a part of your involvement as well?
So definitely reducing costs and improving HSE in terms of that's critical. But as you say, in terms of the shareholder, given that if you look at the macro context of this industry, they're under a lot of pressure to reduce their costs. Oil prices look as though they're going to be fairly flattish for the long term. We're in an oversupplied market. In other words, you can't count on a rapid increase in the oil price to improve your financial performance. So you have to optimize your productivity. You have to be much more efficient than your closest peers. And that's what digital technology can offer. And that will please the shareholders because you get a bigger bang for your buck.
And I think with that, it's time to call it a close and go towards our presentation. Thank you very much for your time. It's been a pleasure to meet you again.
Always
Thank you so much for coming along. Thank you very much, Adrian.